Ladies and gentlemen, welcome to Wealth Down with me, Norbert PM. I'm your host and portfolio manager. So let's jump into today's topics, which is the Chinese market. Is it back? Is it up? Is it down? First things first, let's check on today's market events and vitals. We have today from Japan the tank large manufacturing, which came in as expected. Then we have our inflation rate today from the European Union, which came in lower than expected, signaling some really good results. Then looking forward, still have today the ISM manufacturing PMI in the United States and the jobs report. So pretty exciting day today. Then we're going to have tomorrow the consumer confidence from Japan. And then we're going to have our Thursday balanced trade from Australia and from the US. We're going to have the ISM services PMI. Then on Friday, we're going to have non-farm reports. And of course, the unemployment rate and the PMI from Canada. So Friday is going to be extremely interesting. Definitely stay tuned and stay subscribed to the channel for more important updates. So let's take a look at the stock market. We're going to look back on yesterday. We closed positive, with not only closing positive, but reaching a new all-time high, a small update, 60 points for the S&P. It closed 0.42% higher with a still negative RSI. So it's trying to break out here, but we are in a bull market, as you can see here in the diagram. Also visit the blog and visit, if you want to get it first, then subscribe to free Substack. Also, if you're a paying subscriber to Substack, you're going to get the updated daily trades that I'm doing. So as soon as I do a trade, I'm posting it on Substack, but only for the paid subscriber. Now the Nasdaq closed also positive yesterday, barely at let's just see here, 25 bips. And then the Dow Jones closed also positive yesterday with 0.4%. So nothing. So futures are going to open up negative today, maybe signaling one weaker day in the market. Now let's take a look at commodities. We have oil down, we have gold up, silver up, copper down. Oil down massively today, almost 1.5%. Even above. We have a bit of stronger dollar reported to the euro and British pound, but weaker reported to the Japanese yen. And then we have Bitcoin and Ethereum positive 1.06 and 1.5%. On earnings, we have today Nike. Nike is going to report earnings. So Nike they had a new CEO. That one is a really interesting one. He started at Nike as an intern, then he became head of sales and so on and so on. So the new CEO bleeds Nike. This could be promising for Nike. Bought Nike after the huge drop. We sold it somewhere. So we bought it somewhere in the 76 range, and we sold it somewhere in the 84, 85 range right after it popped. But I still want to see a better guidance after the earnings call. So we'll see what happens with Nike. Definitely keep a look on Nike if you own the stock or if you want to own the stock. A pullback here signal a good buying opportunity. Still, it's Nike. Let's talk about China. Let's talk about the main subject. So China has gone all out to stimulate the domestic economy after a massive jump in the Chinese stock, as you saw later in the last week, due to Beijing's unexpected massive stimulus. The Hang Seng Index jumped like 15%, over 15% in just 1 week. Additionally, the Nasdaq Gold Dragon Index was also up almost 19%. Just take a look at these candles. Now, be aware, we are not only in overbought territory, but we are in massive overbought territory. Also, as you can see, yesterday, Monday, we have our very first negative day, just as I said actually in the weekend report. If you didn't see that, definitely check it out. With this, where we're doing our portfolio review, what we bought and what we sold in each and every week. So if you want to get it daily, become a paid subscriber on Substack. Now, moving forward, also, as I said, the Nasdaq Golden Dragon reached all-time highs, meaning in a short period, has a huge jump, but it's above everything. The 200, the 150-day moving average also is jumped out of its RSI like crazy. So definitely expect here a massive pullback, and then maybe after some consolidation, it's still going to go up. Remember the stimulus that they're doing, not only I believe that is not over, the full effects of the stimulus, although a lot of it is now priced in, the full effects of the stimulus will be seen somewhere in the winter period. Now, most of the economists came out, most of the analysts, or those analysts that basically own Chinese stock, came out and said things like, buy everything that is related to China and it is only the beginning. Some analysts may be biased and they may be questionable here, significant signaling maybe to their share owners that, hey, I know what I'm doing. Trust me, bro, I know where I'm going. Now, with even the CNBC's host, Jim Cramer, for Mad Money, recommending in a recent tweet, actually, he was a bit sarcastic in his tweet. Let's just go to his tweet. Here's his tweet. He in his sarcasm, recommended that the most beneficial stocks from this recent Chinese liquidity insertion will be probably Apple, due to its massive sales in China, then Starbucks. And as you can remember now, here on Starbucks, we bought Starbucks and we also sold Starbucks. So we bought Starbucks on the pullback and then we sold it on the jump. And we completely sold it then a couple of days after that. So we bought it, we sold a bunch of it, and then we completely sold it off. And now it's ticking up again. But I do expect a massive pullback on Starbucks until they do have the new CEO from Chipotle, so he could do wonders, but still he has to do those wonders. And the only thing that I see here is that it's going to come out after their earnings report in his earnings call, and he's going to lay out a good plan. And then I could see that Starbucks could have a good jump in price. Nevertheless, they still have to report good sales. Now, the last stock that Jim Cramer recommended was Alibaba. As you can remember, we did a bit of trade of Alibaba, but now it's coming back. I also predicted that Alibaba is going to have this massive jump and just going to come back. And it did come back yesterday. We're going to see how it's going to trade in today's session. Now, Chinese shares continue to do their rally on Monday, as I said, as officials introduced new measures to support the economy aimed at consumption slump and property crisis. Now, the CSI 300 rose 8.5% and the Hang Seng Index increased 2.4%, making the best week of the Chinese market in over a decade, of course. So property stocks surged after Shanghai, Shenzhen, and the Guangzhou eased property transactions restrictions. The Chinese government and major banks announced plans to stabilize the real estate market and adjust mortgage rates. Now, despite these efforts, the Oxford Economist maintains a 4.8 growth forecast for China, below that official 5% target that they initially announced. Investors are optimistic, as I said before, they buy everything in China, with the Hang Seng Index up 14%, actually it's now over 16% almost, and the CSI 300 up 24% since Tuesday. So am I bullish on China? Well, let's just say, if there is a big enough pullback, that could be considered as a buying opportunity. With the recent stimulus, there will be two effects. More money, people will spend more, prices will go up, inflation will surge. Inflation means higher prices. And, well, you know what's going to result out of that, because it's going to implicitly affect the entire market, the entire global market. So be careful with this. Yes, it did stimulate. Yes, it is good for stocks. It is actually good for all stocks. But what I would say here, that most profitably will still be the most profitable companies, aka Apple. So I hope you enjoyed this episode. If you did, please give me a thumbs up. It really helps up the channel. This is a small channel, as you can see. Also, subscribe to the channel and click the notification bell in order to get notified when we post new videos like this. We post from Monday to Friday, and then on the weekends, we do our portfolio review, where we go over what we bought, what we sold, and what was the reason behind it. Also, if you want to get my trades on the same day and almost in the same hour, then consider subscribing to Substack. Ladies and gentlemen, this being said, I wish you a lovely day. Take care. Bye-bye.